Good morning, everybody. It's January the 20th, 2022. Welcome to the live trading talk. Live trading here, and we're taking a look at the Wall Street Journal U.S. jobless claims, which rose to 286,000 last week. The labor market faces headwinds as Omicron cases remain high. The American workforce is rapidly changing. In August, 4.3 million workers quit their jobs, part of what many are calling the Great Resignation. Filing for jobless claims rose sharply from near the lowest levels on record as workers in business contend with Omicron-related disruptions in a tight labor market. Initial claims for unemployment benefits, a proxy for layoffs, rose to 286,000 a week that ended on January the 15th, following an increase for the week ended January the 8th. Labor Department said Thursday. The 4-week average, which smooths out volatility, was 231,000, an increase of 20,000 from last week's. This puts the pressure off raising interest rates rather quickly. And what we have here is a continuation of the precious metals markets here, with gold up another $3, trading last at $18.46. We are holding a long position in gold with an opened gain of $3,800 per contract. We're holding a silver position long as a long-term position. We're long from 22.85.50, and we have a gain of $8,650 per contract. What we have here is basically a major breakout going on in gold, as you can see. Just using trend analysis, testing 1-2. We are breaking out, and the targets that we're looking at is about $25 here for silver here. If we take a look at the daily charts here, we've completed the sell one level of 24.50 daily, and we have broken out of the weekly number of 23.99, so we are approaching the daily target of 24.80. Now, when we break out of the sell to level, as I instruct my traders here, basically means that the program, by trading above the sell 2 level, has gone neutral. That pattern has been completed, and it falls into the next program, whether it's the daily or the monthly. In this case, we're looking at daily numbers, and we can also take a look at the bigger picture here in terms of the monthly targets, which are 2481. Bear with me here as I'm having some a little bit of difficulty with the sound here on my trading room, but I hope that you can hear my live presentation in YouTube. Coming back to the market here, silver is at 24.59, 24.62.50 is the recent high, and we're looking at the 24.95 daily average price that basically, if we close above 24.95, we're going to be trading above the monthly now, sell 2, which means that the cycles are changing from the daily to the weekly to the monthly, and eventually the yearly cycle will basically integrate all of those cycles into the yearly cycle, in essence, putting together all of the cycles into an extremely bullish pattern. And by closing above 24.95, we literally could take off until the, as you see, the targets annually of 27.87 to 33.73. Let's take a look at gold. As you can see here, gold is trading above the annual average price of 1840, which has activated the target of 2003, which is the sell 1 level of the annual seasonal pattern, and the second level is 2271 that we can potentially see in 2022. This is the seasonal projection outlook for the 360-day cycle, which began on September 28 as we expected. So we are now unfolding into the reversion to the mean, which I've been talking about, by the market coming down to this extreme of 1680 was very extreme below the mean, or the value, you might say mathematically, of gold in relation to the economic picture, the fundamental picture, the debt picture, the interest rate picture, the economic picture, the pandemic picture, including all of those ingredients. The price coming down to 1680 pretty much discounted all those factors. And What it has done is basically confirmed that this was a bottom. This corresponded to a 61.8% Fibonacci retracement from the March 2020 low to the August 2020 high of 2089. Reverting from here now created a low that we can measure from and use other indicators like Fibonacci trend lines, as you can see here. That gives us an indication of the market breaking above or below those trend lines. In incorporating the VCPMI gives us a pretty solid picture when the market harmonically aligns itself with all these other indicators, whether it be Bollinger Band or whether it be Fibonacci trend lines or Fibonacci retracements, Fibonacci arcs, whatever conventional indicator you use. And so what you see here is the market's come down to test this level several times until now we are breaking out above the yearly average of 1840. We are trading above the monthly average, the monthly average of 1805. We're in a bullish price momentum monthly, annually, weekly, daily. And it's defined very clearly our target points that essentially we can use to manage our own portfolios, to manage your portfolio according to your profile and depending upon what instruments you're trading. And so that is a choice that you as a self-directed trader need to make. But this indicator will help you navigate the direction of the market with extremely accuracy. Not a guarantee, not a crystal ball, but a probability model. Bitcoin is following the same pattern as the gold market. And we activated a buy trigger in Bitcoin here after coming down into this low of 41,080, essentially coming down below the averages weekly and the averages daily, and not quite coming down to the 40,975, which was the buy trigger on the daily. But you see here now the market clearly is completing the targets daily and has activated a weekly bullish price momentum. And so these numbers are numbers that, again, are targets, mathematical probabilities, pivot points, which are enhanced by the algorithms, artificial intelligence that tells you now that the price on the daily is overbought. On the weekly, it's in a bullish price momentum. And so you can use the nearby targets for you to lock in or trade against your position, depending upon what it is that you have. The program is saying basically that now that the market is trading above the weekly average and the daily average, it has completed the daily first target of 42,510, the second target of 43,330 daily. So the daily program now has completed the pattern. The weekly has a target of 45,400 45,363. So if you have multiple positions here, you can take profits here, reduce, hedge, use your ability as a trader and skills, depending upon your profile, to use this GPS for trading, basically. Let's watch the market here for a little bit, digest some of this volatility. It is a very good sign that we have a follow through on the metals here today once again. And as you can see, the markets are approaching targets, meeting targets, but building a very bullish pattern by harmonically aligning now all of the trends, including the annual trend. So it's a pretty compelling bullish picture that we have, in particular for the silver market. Now, the featured product that I'm focusing on right now in taking advantage of the silver market outside of the futures market is a company called Hecla Mining, which is the one of the largest silver producers in the United States. I think responsible for producing about 50% of the silver production. And we're using a combination of indicators such as Fibonacci fans, arcs, retracements. And we want to recommend this as a buy and hold. We've been recommending this since the 11th, basically, that this is a great play. It's come down into a Fibonacci retracement of 38.2%. And we're breaking out of the Fibonacci trend lines here that you can see around 581. Now, I think we have the potential to complete at least a 78.6% retracement, which is 829. And potentially test the previous high that we saw of 944. The stock also gives you the opportunity for you to trade derivatives underneath. And this is how pretty much I'm applying and monetizing out of the silver market directional signal besides the futures contract, which is very difficult sometimes to manage for most people, as the market is vulnerable basically for volatility. And once we get volatility, there is a probability that the exchanges will increase the margin requirements in order to control that volatility, which in essence is, I believe, a way to control price. and so you're subject to margin calls, you're subject to a lot of regulation, and so it's great to day trade, which is what we do here. But if you're looking to build a position, if we're looking for a substantial move in silver market, then we want to take a look at putting this stock into your IRA account, into your trading account, into any account that you want to buy and hold. I think it's offering a fantastic opportunity. And for conservative traders that want to buy a gold mining or a silver company, a silver mining share, I think this is one of the oldest companies, established company, and a great trading opportunity. As you can see here from these levels here back in January of this year, basically just into this spike that we saw in silver back up to 30, we saw the market trade this stock at 944, and it's come down to 450, so it's come down 50%, or I would say almost 100% from the previous low. So we're back down into 450, and if we just go back up to the old high that we saw, we're going to be doubling the price per share. So this is a very strong recommendation as a buy and hold for a silver mining company. $24.61 on silver. We're looking at $24.70, $24.80 approximately for the day as the daily target next. And you can see the daily chart looks explosive here. $25.21, I believe, is going to be tested. $24.80 is the sell to level daily. One of the fundamentals that is looming in the market potentially as a black swan is the possibility that Russia may invade the Ukraine. And that's a potential crisis that is developing here, which could have a serious impact in commodities, grain, energy, crude oil, unleaded gas. One of the markets that quietly has been moving up is crude oil. And we need to pay attention to this because it could be a disruptor in the markets. Albeit may be short term, but it's something that it is pending. I don't believe that they will invade. I think this is a major chess play that Putin is doing to the Western world, to the Western economies. But you never know. And so the markets are a little bit jittery. And it could be one of the reasons here why, in addition to the economic picture that we have, the metals are beginning to move. So it's just another element that is building up the pressure for precious metals to move sharply higher, to adjust not only to the new change in paradigm that we're seeing as far as values are concerned, regarding inflation, regarding this continued bottleneck of short supplies. And so it almost feels like some kind of a stagflation where we essentially have a strong demand, but we can't get supplies. There are some good news regarding the Omicron that seems to be coming to the end, potentially, of this pandemic, potentially here in the U.S. and also in I believe, the United Kingdom and some parts in Europe possibly. So it's a light at the end of the tunnel that we might be coming to the end of this pandemic and the sun is coming out. And what we are going to see is basically the damage that has been caused. We have yet to see what that is, and it will dictate basically the next move, the next level of volatility. Continue to maintain your core long position. We are breaking out in precious metals, and we are beginning to adjust in digital assets as well, like Bitcoin. Have a great trading day, my friends, and be safe. I will talk to you next time. Take care.